Peter Lynch, a legendary figure in the world of investing, is best known for managing the Fidelity Magellan Fund from 1977 to 1990. Under his leadership, the fund's assets grew from $18 million to over $14 billion, making him one of the most successful and influential investors of all time. Lynch's remarkable career is filled with lessons, successes, and even a few failures, each contributing to his enduring wisdom in the financial world. Peter Lynch was born on January 19, 1944, in Newton, Massachusetts. His interest in the stock market sparked early when, as a teenager, he caddied at a local golf course frequented by financial executives. This experience not only gave him a unique perspective on the investing world, but also helped him pay for his education at Boston College, where he graduated with a degree in finance in 1965. Later, he earned his MBA from the Wharton School of the University of Pennsylvania. In 1966, Lynch joined Fidelity Investments as an intern, researching various industries, including textiles, mining, and metals. His hard work and sharp insights led to him joining the Fidelity Research Department full-time. By 1977, at just 33 years old, Lynch was appointed as the manager of the Fidelity Magellan Fund. Lynch's tenure at the Magellan Fund was nothing short of extraordinary. He transformed the fund into the best-performing mutual fund in the world, with an average annual return of 29.2% during his 13-year management. His success earned him the admiration of Wall Street and Main Street alike, as he consistently outperformed the market. One of Lynch's defining characteristics was his buy what you know philosophy, encouraging investors to invest in companies they understood, rather than relying solely on analysts and financial reports. He believed that everyday observations, such as products you use or stores you frequent, could lead to valuable investment opportunities. This pragmatic approach resonated with individual investors, making his style accessible and relatable. In his best-selling book, One Up on Wall Street, Lynch shared insights from his career, emphasizing the importance of doing research, investing in companies with strong fundamentals, and holding on to investments for the long term. His famous saying, "The person that turns over the most rocks wins the game," epitomizes his commitment to thorough research. When Lynch took over the Magellan Fund in 1977, it was a relatively small mutual fund. By the time he retired in 1990, the fund had grown into one of the largest and most successful mutual funds in the world. Lynch's ability to pick winning stocks was legendary. His investments in companies like Dunkin' Donuts, Taco Bell, and Ford are prime examples of his knack for identifying undervalued companies that later experienced significant growth. Lynch was known for his ability to balance growth and value investing. He categorized stocks into 6 groups: slow growers, stalwarts, fast growers, cyclicals, turnarounds, and asset plays. This diversified approach allowed him to spot opportunities across various sectors and industries. Lynch popularized the term 10-bagger to describe stocks that increased tenfold in value. He sought out these hidden gems, often finding them in companies that the market had overlooked. His investment in Taco Bell, for instance, became one of his famous 10-baggers. Beyond his remarkable investment performance, Lynch contributed to the broader financial literacy of the general public. His books, including Beating the Street, offered a wealth of practical knowledge to everyday investors, demystifying the world of stock picking and mutual funds. Despite his many successes, Lynch also faced failures during his career, and he was never shy about sharing them. His transparency regarding his mistakes was one of his most admirable traits, as he believed that learning from failures was crucial to becoming a better investor. Diversification dilemma. One criticism of Lynch's management style was his tendency to hold an extremely diversified portfolio, often owning over 1,000 different stocks at a time. While this approach helped mitigate risk, it also made it challenging to outperform significantly with individual stock picks. Some believed that his diversification limited the upside potential of his top-performing stocks. Missed opportunities. Lynch admitted that he sometimes sold winning stocks too early. For example, he famously regretted selling his shares of Ford too soon, missing out on substantial future gains. However, he always stressed that missing out on gains was less harmful than holding on to losing stocks for too long. Underestimating market volatility. Lynch's strategy largely focused on the fundamentals of individual companies, but he sometimes underestimated broader market volatility. During times of economic uncertainty or downturns, even solid companies saw their stock prices drop, which Lynch acknowledged as a blind spot in his approach. In 1990, at the peak of his career, Lynch made the surprising decision to retire from managing the Magellan Fund at the age of 46. He wanted to spend more time with his family and pursue philanthropic endeavors, a decision that reflected his belief in maintaining a balance between work and personal life. Since his retirement, Lynch has remained active in the financial world, continuing to offer advice through his writing and speaking engagements. He also turned his attention to philanthropy, using his wealth to support various charitable causes, particularly in the fields of education and healthcare. Lynch's foundation has contributed to cancer research, and he has also funded scholarships and programs to support students from underserved communities. Peter Lynch's legacy extends far beyond his incredible track record at the Magellan Fund. He has left an indelible mark on the world of investing, particularly through his efforts to educate everyday investors. His books, including One Up on Wall Street and Beating the Street, continue to be essential reading for anyone looking to understand the stock market and investment strategies. Lynch's common-sense approach to investing remains relevant today, with timeless principles such as invest in what you know and do your homework. He advocated for patience, research, and a long-term outlook, warning against the temptations of trying to time the market or chasing short-term gains. In a financial world often dominated by complex strategies and jargon, Lynch stood out for his simplicity and relatability. He proved that successful investing didn't require a Wall Street background, just curiosity, diligence, and the willingness to learn from mistakes. Peter Lynch's career is a remarkable story of success driven by curiosity, discipline, and an unwavering belief in the power of research. His down-to-earth personality and humorous quips, like "go for a business that any idiot can run, because sooner or later one will," made him not just a financial hero, but also a relatable figure for countless aspiring investors. While his stock-picking skills are legendary, Lynch's greatest contribution may be his ability to break down the often daunting world of investing into simple, actionable advice. His legacy continues to inspire both seasoned professionals and beginners alike, proving that with the right mindset, anyone can beat the street. With an incredible career filled with both triumphs and missteps, Peter Lynch remains a model of what can be achieved when you combine hard work, curiosity, and a willingness to learn, always with a good sense of humor. Like and subscribe to Marty's Money for more fun and educational investment content.